On today's episode of Gathering the Kings.
This is super personal, and I don't know if I've ever said this exact thing on a podcast, but, I believe, I think we can all look around at the earth, at politics, the environment, business, relationships, marriage, and say, man, something's wrong. Something's wrong on this earth. And I really believe, I think we all have an innate sense that it wasn't meant to be this way. I think some of our failures are the launching points for our greatest success. The right answer often comes through a voice that sounds an awful lot like my wife. In other words.
And I agree already with whatever you're about to say. What's up, everybody? I'm Chaz Wolfe, Gathering the Kings podcast. I'm back with you here today with a king on the stage, Paul Moore. Paul, how we doing?
I'm doing great, Chaz. It's wonderful to be here. What an honor, man. Thank you.
I appreciate that. Also appreciate the energy and like kind there. I know some of my guests get a little fired up and others don't know what to do with my little intros, but it's real. And I get excited about personally having conversations with incredible people like you. I just get to share it with the rest of the world too, but I'm over here like mentally downloading and learning and taking notes. So I'm excited to learn from you. Paul, tell us what kind of business that you have.
Yeah, I run a commercial real estate fund. It's a diversified fund where we work with hundreds of accredited investors, and we invest in self-storage, mobile home parks, RV parks, multifamily, and more assets. So that's what we do. We're on our sixth fund now and having a blast.
I love it. I love the word diversity inside of real estate. In fact, I truly believe that you could be anybody you want to be in real estate. There's just so many different avenues. Would you agree with that?
It's so true. I mentioned to you earlier, I wrote a book on self-storage, and there's I said, here's 7 different paths you can go down within commercial real estate. And there's probably a lot more I don't know, I don't have in the book.
Yeah.
So absolutely agree.
Yeah, it's like, the power of niching is there, and I get it. And you can go deep in one, but I just really like to diversify. I like lots of things, lots of different types of projects, different angles. And it sounds like that's a little bit of the approach that you guys take too. So I'm sure we'll get into some of that. But before we do, I got to know what makes you tick, Paul. You've been doing this for a while. And even before we hit the record button, we found out that we're kind of associated to a couple of folks here in Kansas City that we might know that are the same folks. Yeah. What's like the deeper inner, makes you wake up and get fired up after all the success that you've had?
Yeah, this is super personal. And I don't know if I've ever said this exact thing on a podcast, but, I believe, I think we can all look around at the earth, at politics, the environment, business, relationships, marriage, and say, man, something's wrong. Something's wrong on this earth. And I really believe, I think we all have an innate sense that it wasn't meant to be this way. And so really my desire is to just put it super bluntly, Jesus said, pray on earth as it is in heaven. And my desire would be to bring a sense of heaven to earth in every relationship, in every business, in every interaction, even with a telemarketer on the phone. I just really want to make people happier and make them, better. And even if it's an employee who works for us and then leaves, I want them to have a better life afterwards than before. And of course, that's a big focus of us with our investors as well.
I like how you put the perspective there of, yes, it's them being better or having a happier, more joy-filled life, but you associated that to, the things of heaven. And so does that come from like a journey that you've been on? Just real quick here. I don't want to dive, the whole show on this, but when I think of being heavenly, right? You're talking about joy and being better. Sometimes people don't connect those things. Why have you connected those things?
Yeah, for years, I actually became a Christian 38 years ago. And for the first 28 years or so, I lived with a huge problem. And that problem was right here between my ears. I actually thought that there was a dichotomy between my personal life and my business life. Or another way to say it would be my business and my faith. And I realized that was ridiculous. I mean, I could spend a long time talking about this, but honestly, some people call it 7 mountains of culture. And these 7 mountains, these 7 different arenas, it's like they're all supposed to be reformed, if you will, or they're all supposed to work as they were designed. And those would be things like business, the arts, government, family, religion, entertainment, sports, there's a few more. And I would really think that all of them should have an equal, like if I'm in the business realm, that's not separate from me, living a good life with my family or going to
Right.
church. I mean, I think it's all integrated. And I really think that, like if I have a chance to love one of my investors who's having a difficult time in their life, and I actually was able to pray with one of my investors who's having a hard time earlier today, that is going to make their life better. And so
Yeah.
that's my desire once I've come to that realization about 10 years ago.
Well, I appreciate the vulnerability there and how that's impacted, just your life, but others around you. I feel the same way that there's situations that we can be in, and it's not like, wearing a flag of sorts, right? And trying to convince anything of any or anyone of something. It's
Right.
living in a specific way that agitates thought. And they go, huh, that guy, Paul, he's a little different,
Yeah. Different.
a
That's
little
true.
different.
Uh, I don't
You've never had
mind.
anybody say that about you, have you?
I'm pretty sure they have.
Yeah. Yeah, as have I. And so let's get into some of that because we are different. And I want to be able to share some of that as far as what makes you different. But you've got this heart to help people, really, is what I heard you say. And so tell us the journey that you've been on. I know it's been, obviously there's a lot to it, but before you got into real estate or business, before you were in this mountain of business, what'd you do before?
Yeah, so I got an engineering degree in the '80s. That was my first mistake. And then I got a business degree after that, which was probably closer to who I am. And I went to Ford Motor Company, a company with hundreds of thousands of employees, and I actually really liked it. But I noticed after a short time, I was constantly daydreaming about doing something entrepreneurial. And so a friend of mine said, "Hey, I'm having the same experience." So we started strategizing on a business to start on the side. And after 5 years at Ford, we left and we started our own company. We were very fortunate to be in the right place, right time, and we were able to sell that to a publicly traded company 5 years later. And I thought, I want to start a nonprofit to serve people. But actually, it was the nonprofit we started, it just didn't it was okay, but I was a 34-year-old, high energy, type A entrepreneur, and so I found myself daydreaming again about starting another company. So we started flipping houses, then flipping waterfront lots, and then building houses. And I also thought, "Hey, I've got this money from selling my company." I thought, "I'm a full-time investor now." And, you know what? I say that way because I felt I was more proud than I should have been because I wasn't a full-time investor. I was actually a speculator. I didn't know the difference, Chaz. And, now I think, investing is when your principal is generally protected and you've got a chance to make a profit. Speculating is when your principal is completely unprotected and you've got a chance to make a profit. And the older I've gotten, the more I want to avoid speculation. I think it's fine for a small amount of your portfolio, but generally, I think the path to wealth for the vast, vast majority of people is to invest wisely, invest safely. And, it's a lower stress path. And I mean, let's face it, if you lose all your money playing double or nothing, you'll have nothing. And then where will you start? You'll have to start over again in your 40s or 50s. And that's just not what I want to do again, because I have done that, to be really honest with you. That's one of the reasons I had a podcast for years called How to Lose Money.
You're going to give us a couple of tricks of the trade here on how not to lose money, because not only have you lost it, but you've interviewed so many people that have. I think actually that any entrepreneur at an eventual success level can join that club and say, yeah, ouch,
Yeah, right.
that wasn't a great decision. And I appreciate you being so forthcoming and being able to maybe share some of those things. I do want to get to that. You kind of mentioned, though, that there's been this, I guess, I don't know, like risk reward, double or nothing. I think the only way to protect your capital playing double or nothing is to not play, or to to keep your original investment over here and you're only playing with the
Right.
house money, if we're using
Exactly.
this language.
Yeah.
So for you, what you do now, just kind of put a bow on this for us. Why do you like what you do today? How is that so safe, secure, the
Yeah.
right type of investing in your opinion?
Yeah, I'm really passionate that people diversify wisely, and my investing hero is Warren Buffett. And Buffett says diversification is for people who don't really know what they're doing. Now, I'm writing a book about Warren Buffett's principles for real estate investors, but I don't like that one. And then I realized, wait a minute, Berkshire Hathaway is the most diversified company in the Fortune 500, or at least for sure in the top 10 or 20. They've got 100 and I think it's 108 companies in massively different arenas. I just
Yeah.
realized, wait, it's good for the investor to have diversification, but it's good for the individual operator to have hyper focus. And so we're out there, our company, we consider ourselves due diligence partners for our clients. And we are looking for the best of the best operators in recession resistant asset types. And then we put them together under one umbrella for for our investors to be able to invest, for example, $50,000. And then they can get a diversification across these different, what we would hope to be best in class operators, though there's no guarantee, but diversification helps in the case where some of them fail along the way. See, what I realized is, I don't know if you know, follow Perry Marshall, but he wrote an amazing book called 80/20 Sales and Marketing. And he says that the 80/20 rule is fractal. And that
Okay.
means the top 20% of the top 20% of the operators in my realm would produce the top 80% of the top 80% of, the investments. And what that means to me first is safety of principle. It's going to be way safer if you're one of those top 4% of the operators. And then, of course, that's going to lead to higher cash flow and ultimately higher returns. We would hope, though, like I
Right.
said again and again for my compliant person who's going to be listening, that there's no guarantees.
Yeah, of course. At the end of the day, I think that's why maybe the depiction that you've given here is it's still investing. You're still taking money to make money. It can be lost. You said there's no guarantee. But I think that's why it's led you to want to be in not only diversification, but be in an industry that maybe has a real asset attached to it, as opposed to, let's say, a coin or a business even. Sometimes the businesses can be gone as
Right.
opposed to a physical asset. What do you think
So true.
for what do you think for you inside of building obviously a couple different companies now? What do you think has been just a really good decision that you've made? We're going to get to your plenty juicy bad ones here in a minute, but just
Mm.
something super practical that you can share with the listeners that's been just you would do it over and over and over again.
The best decision business wise I stumbled into, I met a junior at Liberty University named Ben 10, maybe 11 years ago. And he actually, unlike 90% of the people who said they wanted a mentor, a mastermind, he really did. And he actually followed up after I met him at a chance meeting at a spring break camp where my daughter was going. They were both about the same age. And so he said, hey, he got hold of me and he said, hey, can I pick your brain? So we spent 3 hours at my picnic table, talking about stuff. And then I followed up with him more. And when I eventually hired him as a senior at Liberty University, well, he's become what they call an integrator in the EOS world. So if for those of you who've read Traction, Gino Wickman, are following that whole mindset, he is actually what an EOS consultant who's done 5 to 700 companies over the years. He said, at age 27 at the time, he said he was equal to the best integrator he had ever met. And the reason this is important, Chaz, is I'm this, head in the clouds entrepreneur. I'm dreaming. I'm coming up with the next big idea. I'm out there kind of floating around looking to meet people, have fun, take a 20-minute coffee meeting and turn it into 2 hours, all that kind of stuff. He's got all the stuff dialed in, timelines, deadlines, accountability, managing people. He's just got a fabulous way of doing that. So the best decision I made, and one of the reasons this company has worked so well in comparison to some that didn't, was Ben is a fantastic integrator and he allows me to dream, to write, to do shows like this while he runs the nuts and bolts.
Yeah, I appreciate that. Gathering the Kings also has that. Jake has been a great friend of mine for a long time, and we finally circled up as just that, visionary and integrator. And so funny when those things happen because for both he and you, for Jake and I, it's like, oh, it does exist. I can do all the things that I'm meant to do, and you can do all the things that you're meant to do, and
Yeah.
and it just works. What would you say for the person listening right now? I mean, maybe they're familiar with EOS, maybe they're not, but they understand, like, okay, you got a number two or a co-part, and it just works. What are they doing, or what are they taking away from this, going other than that they need one? What are they like? What can they take from this from you?
Yeah, I've partnered with one of my best friends a number of times. It just we were best friends because we were so similar, and that didn't really help. And one
Mhm.
time we were managing a multifamily property years and years ago, and I was like, "Okay, so remember, I'm the guy who's finding the deals, raising the money, getting started, and I'm handing it off to you to do operations." Well, he was more like me than he had originally represented. And it's not that he was lying. He thought
Yeah.
he was an operations guy, but when the rubber met the road, he wasn't. And especially when, I met Ben, I was like, oh, well, here's an operations guy. And so I think the answer would be don't necessarily partner with someone like you. And it might not even be somebody you really even like all that much, as long as your skills are complementary.
Yeah, you're right, because especially on that, there's a book, Rocket Fuel, that
Yes.
talks a lot about this partnership, and there's a little survey in there, but they also use Culture Index, which we use as well. I'm not sure if you're familiar with them, but on the Culture Index, Wes talks about, or in Rocket Fuel, he talks about there being this certain profile. But there's this one in between, like where about 5% of the people, maybe even less, he says, think that they can do both. And so there's a lot of
Yeah.
people that think that they can do both, and then they get pressed into the situation. They're like, "Oh, I know I'm not a visionary," or "No, I'm not an ops guy," whatever those
Right.
things are. So it's pretty cool that you've
Yeah.
been able to experience that.
Yeah. It's been great.
What would you say, just flipping the coin just really quick here, because you've kind of already tipped into this bad decision, but you've been on a lot of podcasts with a lot of people making bad decisions, losing money. What's the very craziest story from your podcast, actually, that you can remember as far as bad decisions, losing money?
Oh, yeah, you really put me on the spot here. It's been 3 years since we recorded any, and I could I actually give you a couple of the principles we
Oh, sure.
learned and then circle back to that if I think of the worst, because there
Yeah,
were so many they blended together. A whole bunch of them were from 2008 era, as you can imagine.
I can
And
imagine.
of
Yeah. Well,
course,
principles are what we take away and learn from anyway. So yeah, give us the juice.
yeah, so one principle we learned, and listen carefully, it's so strange, but it's really, really important to walk away quickly. One of the folks we interviewed was from Charlottesville, Virginia, and he actually has a mastermind and mentoring program in real estate. And he said, "Hey, you want to know how to become a millionaire in real estate, in the restaurant business?" And I said, "Well, sure." He said, "Start with $2 million and buy a restaurant." And so anyway, he basically said it's so important to walk away quickly. If you see you're on the wrong path or just started off wrong, you just get out while you can, salvage as much money as you can and start somewhere else. And I'll tell you, I failed at that. We had a successful multifamily business in North Dakota in the Bakken doing oil and gas employee housing. And
Oh,
that was going super well, and we noticed that there was really poor internet up there, and there were thousands and thousands of people, like 12,000 coming into a town of 3,000 residents, and they needed internet and cell service, so we started Bakken Wireless and spent hundreds and hundreds of thousands of dollars and many years actually trying to get that to profitability and failed. We should have probably pulled the plug on that 6 months in when we realized that a lot of these wireless radios froze up in the 40-degree below prairie in North Dakota, and we could have saved us all a lot of money, but we didn't. So one lesson is walk away quickly when you realize you're on the wrong path. Now, here's the bizarre one. Our second biggest lesson we learned from this show was never walk away quickly. Stay in there, persist.
yeah.
Fight to the end, never give up. The what was it, the picture, the pelican swallowing the frog, but the frog's got his hands around the pelican's neck and it says, "Never give
Right.
up." And people would come on the show and say, "If I would have quit, like I wanted to quit in December of 2002, and but in January 2003, I got the biggest contract ever. If I would have quit, I never would have got there." Don't quit. And so it's
Yeah.
like, huh. So we tried to write a book called How to Lose Money, and we were like, wait, these are two like opposite principles, and they're the biggest thing we heard. And of course, the answer is a little hard to explain, but I think the way to put that together and integrate it is, if you find out you're on the wrong path with the wrong people, with the wrong product, going down the wrong path, you quit quickly or very quickly pivot. If you think you have the right product, you're on the right path, right people, that's when you persist.
Yeah, you gave a really succinct answer there. In fact, as you were saying the first principle in my mind, I was lining up my second question to be like, I hear you, Paul, but what in the moment? What about all the successful people that say you got to persist and stick through it?
Yeah.
Because you're right. It's a double-edged sword. And I think that you gave actually a really great description there. For the
Thank
listener
you.
right now who's like pondering this and going, okay, yes, I've heard to persist, not to quit. But yet at the same time, like move when you need to move is the second piece. And so it's like for them, how do they know if they've got the right person, the right product? Like, where's that discernment come in for them to be able to actually go, do I stick it through or do I hang tight? Or do I get rid of
Yeah.
it? I mean,
Well, here's another crazy paradox. Proverbs says, in the abundance of counselors, there's wisdom. That's a paraphrase. So I think it says I think I'm very close.
Yeah.
And also we found people on the show. So we found people on the show who said that I had to get people in my life who would be confrontive, who would be honest, who would hold me accountable, and who would, speak the truth. Then other people on the show would be like, I had to ignore all the voices around me. I knew I was right. I knew I could do it. And so another paradox is created by your question. And I really don't have an answer. I mean, we could talk about it for a while. Maybe we'll come up with one. I just think it's different for everybody. And here's one simple principle, and you might laugh, but the right answer often comes through a voice that sounds an awful lot like my wife. In other words.
And I agree already with whatever you're about to say.
Yeah, like the Bakken wireless debacle, for some reason, the day I told her about it, I remember right where I was standing, excitedly waving my arms and telling her how we were going to make millions of dollars. She said, I don't feel good about this. Don't do it. And she kept saying that. And I was like, you can't give me any solid reasons. Well, somehow or another, she had an incredible ability to discern that it was a bad idea. So guys, listen to your wife. Wives, I don't know if you should listen to your husbands or not, but anyway, that's my 2 cents.
Hey, kings and queens, Chaz Wolfe. I want to talk to you about something that's super important to me. We put a lot of time and effort, we meaning myself and my team, into this podcast, into the content that goes out every single day. And if you have been getting any sort of value or insight from this, we want it to be able to reach other business owners too. So we would love if you would like, comment, share, leave a review, post, share again, all of the things on social media, on all the different platforms, or even on the podcast mediums of Apple and Spotify. We would love to be able to get our content into more hands, more entrepreneurs, so they can grow their business as quick as possible. Together, we are building a community of like-minded entrepreneurs who are committed to growing their businesses to new heights. So let's do this. Let's help each other. Let's help each other grow. Yeah, I've shared in response to something similar here in the past situation where my wife and I were expanding our franchise territories. This is years ago. And there was a store that I wanted to, and I had a strategy and there was a business case. And there was none of that on her side, at least not that my opinion supported. And she just was like, no, we shouldn't do it. And I went ahead with it anyway. And I lost hundreds of thousands of dollars on that deal. And I think that the takeaway, yes, it's different for everybody. Listen to your wives. All that's really good. What I'm picking up though from you is that in these paradoxes, it's like it really comes down to like what is truth, and then being able to stick true to it, I guess is what I'm saying.
Yeah.
Because to you in that moment, it's like whatever the desire is, even if it doesn't work out. It's like in this situation where it didn't work out for you with the wireless and it didn't work out with me on that location. It's not like it killed me all the way, right? Because my desire was to win holistically around it. It wasn't just that one little piece. And so even in that, it was like, okay, fine. I'm still going to win though. Business, life, marriage, the whole deal. So I'm curious to hear what your thoughts are on that.
It's funny. I think some of our failures, and that was one of the themes of our podcast, are the launching points for our greatest success. So if you want to look at my life, the fact that I was a speculator was a launch pad for me to be the extreme opposite now. And,
Right.
I can't say I hate speculation, but I really believe that the vast majority of wealth is for the vast majority of people is created by careful, wise planning, stone upon stone, growing slowly. And so I really, really believe that, that the seeds, Howard Marks says, the seeds of success are born in our failures. And I really think that's absolutely true. I really believe that that's part of our story. And I think, so I can't remember who said this, but somebody said, I would never invest with somebody who hasn't failed in the past.
Yeah. Yeah, I think that a lot of people would maybe shy away from that failure or that badge, if you will, thinking that other people will maybe look down on them. But actually, the ones that are successful, like you're saying, they know that it's like, oh, well, if you haven't failed yet, then nah, I'm going to wait because it's coming. And
Yeah,
also, I
right.
don't know what you're going to do with it. If I've seen that you failed and you're still winning, like in the example that we were just giving, then it actually builds my confidence that you know how to handle it because we both know it's going to come again. It will come again, period.
Yeah,
We just got to know
that's
how to
so
handle it.
true. Yeah, that's one of the reasons I like diversification. I used to put all my eggs in one basket, and that was one of the big mistakes I made over the years.
Yeah. Let's talk about, you're in commercial real estate, but yet you're diversified. So, we're sitting in here, Q4 2023 is about to start. There's a lot of, maybe speculation, if you might want to go to that word about commercial real estate. And some people are very excited about lanes on commercial real estate and some are not. What says the guru on the other side of the mic here?
Well, you know, we are doing the same thing that we were doing when the market was booming, trying to hit singles and doubles when lots of people were hitting grand slams regularly.
Yeah,
And
that's
we're
good.
probably going to do the same thing now in commercial real estate, like a lot of businesses. Well, actually, let me back up. So, Buffett talks about the efficient market hypothesis, and he says, we're rooting for everybody possible to believe that and he says that tongue in cheek, because he says, as long as people believe that, we'll continue to profit much, much more by proving it's not true. Now, here's the thing. It is true, but it's got exceptions, and those exceptions are where the money is made in stock and business, investing in businesses. What's similar in commercial real estate, while in general, commercial real estate may be going the wrong direction, it may be, the cap rates may be expanding, which means the values are going down. The resale values are tanking right now. People with floating rate debt are in massive trouble right now. While all that's happening, there are still exceptions, and those exceptions usually come, and I'm being I'm overgeneralizing this. But Chaz, the exceptions in commercial real estate and residential are by buying the one-off unusual deals. And that's a lot of work. It doesn't mean like you're checking through your broker's website. It means you are working really, really hard to find those mom and pop, one-off, undermanaged, well-located deals. An example would be, we recently invested in a self-storage property near Las Vegas where the going rate on a 10 by 10 storage unit was 148. Well, this one was charging $60. They weren't full. There was no marketing. They had a bunch of homeless people living there, and they weren't even collecting from a bunch of the tenants. And I don't even think they had really good signs, no website. And so, buying an asset like that and paying the owner a very fair price, it was on a great location, in a great city. So turning that around, getting the illegal homeless folks, to vacate, getting the tenants to pay, putting up signs, putting up a beautiful website, getting great managers, and raising rents even halfway from where they were to market is a massive, massive win in any economy. And especially since the operator we invested with paid cash for this, it just creates a very, again, I would say not guaranteed, but likely quite a safe investment. And I could just spend the rest of the next hour telling you other things like that, that we folks that we know have invested in where there's like a mom and pop asset that was just completely neglected. One of them in your area we bought recently, the guy called and said, "Hey, you've been calling me for 9 straight years since 2014 to buy my self-storage facility. Would you pay me the same thing you offered me in 2014? Because I gotta be honest, this place has gone way downhill since then." And the answer was, let me think about it. Yes. So paid him what in his mind was too much and a fair price, but now we're able to
Yeah.
take that and turn it around and turn it into what it should be. And maybe I'm not saying the operator will do this, but he could easily potentially double the value of that facility and 4x the value of the equity. Now, will he?
Yeah.
We don't know if that'll happen, but when you have a bunch of deals like that in your portfolio, it makes you feel a little safer in any economy.
Yeah, you start to see trends. And although one job or one business or one property doesn't speak or influence the other, it begins to tell you a story. And all
Yeah.
data tells stories.
Right, and I just wanna throw in, I mean, in some of these same funds, we've had other deals, like one had an 8% loss. It was acquired in St. Paul, Minnesota, right before the riots, the unfortunate riots that happened in 2020, and it was hard to staff, it was hard to keep it safe, and the police had other things on their mind at the time, and so after about a year of that, sold it for an 8% loss, and that's one of the reasons I love being part of a portfolio because it didn't hit our cash flow at all. And that money, that 92% of the money that was left was redeployed into something more profitable. And
Yeah.
so, but there are those losses. Now, if I put 100% of my money in that happened to be in that lost one, I would have lost all my money. And so that's why I don't like going big on a single asset.
Yeah. Well, I think you just gave a great example of the advice you gave just a few minutes ago of getting out when you know it's a bad deal or a bad operator or whatever the
Mhm.
situation is. You made a recognition, sold the deal, even if it was at a loss, it's fine. Like you said, that 92% that you were able to obtain was able to go back into another investment and probably has grown past the original 100% at this point anyway.
Yeah, you would hope.
Yeah, that's the idea.
Yeah, right.
Okay, let's talk about a little different angle here. I want to go family for a second. I'm just a really big believer that I can obsess about multiple areas at once, and balance doesn't really exist. In fact, you said it a little bit earlier as far as being able to put attention on a lot of different things, but for business, investing, and my wife or and my kids or and anything else really that I think is important. But for me, those are the two kind of like things that always get, pinned up against each other. How have you over the course of your successful years been able to obsess or go all in on both of those at the same time?
Yeah, I've really failed more than I've succeeded, I think. It's amazing. All my kids love me. I'm hanging out with all 4 of them for the next week starting tonight. But yeah, I think I failed a lot at that. Again, I think I mentioned this earlier, Gary Keller and Jay Papasan's amazing book, The One Thing. One of the chapters is work-life balance is a myth. And the point is, when you're at work, you're all in. You're giving it your all. But when you're hanging out with your family, you're all in with them. You're giving it your all. And that's one thing that I learned from that book that I wish I would have known. And I wish I would have implemented when my kids were little. However, I think that would be the answer, if that makes sense.
Yeah, no, absolutely does. For the guy or gal listening right now that maybe does have youngers, and it's the younger version of you, maybe, and you're trying to give this depiction of being able to go all in when you're with the family, all in with the business. What does that look like practically on a day to day for that person listening, going, I'm just so busy and overwhelmed. I don't even know how to do what you're talking about. Well,
Yeah, one thing was a realization that for an entrepreneur, I'm never going to be finished. When I worked at Ford Motor Company, I was done with work at 3:30 or 4:30 or whatever I quit for the
yeah,
day. But I'm not as an entrepreneur. There's always more to do. And so it's kind of a leap of faith for me to basically say, okay, I'm going to leave my iPhone and my computer in my office, in the basement or wherever, and I'm going to go hang out with my family and focus with them. The evidence that again, if I could only roll back 25 years, But the evidence of this was the one vacation I went on, I left my iPhone, actually it was a BlackBerry at the time, with my administrative assistant. And furthermore, we didn't have cell coverage at the house, so I couldn't even use my wife's. It was a cabin in Tennessee. We had such a great time there that we got hold of the owner and extended it and stayed 2 weeks instead of 1. It was so amazing. And again, I wish I had a lot more vacations like that. I've intentionally since then scheduled almost once a year, a week away at a remote place with no cell coverage, and that's been great. We've been to Alaska and Canada and Yellowstone and Grand Canyon, and some of those had cell coverage, obviously, but a lot of them, Alaska and Canada, did not.
Yeah. Yeah, I can think of some of the very first elk hunts that I was going on. You don't
Yeah.
know the full story, and neither does the audience, but I didn't know my dad till I was 24. He didn't know I existed even. And so I'm elk hunting after I met him. It's been the thing that he's done for his whole life. And I've got a couple businesses, and I'm like, a little bit freaking out. And you realize that you're going to a place where I had no cell service. We were in the wilderness. And things they get put into perspective really quick that like if something were to be wrong, then I'll handle it when I get back. And you can do the same thing with your family. And it's taken me probably like you longer than I would be willing to admit that was important to me, or important enough has been my story. It's always been important, but just not enough to actually take the steps of, leaving the phone on the desk and checking out on one and checking in on the other for that important time. So thanks for that. Appreciate that.
Absolutely.
I've got one last question here for you, Paul. I want to know, is similar lane here, but if you could go back into time again, but you're whispering to the younger Paul about anything, what do you tip him off with?
I would definitely hit this family thing really hard. I would definitely hit the faith thing really hard. I would have, gone back and said, look, your faith should be part of everything you do in business and life, etc. One thing I would say, and now this is very particular to me personally, Chaz, I would have said early on, learn all you can about commercial real estate and jump into that. And again, that's very much for me personally, but it took me way over a decade in single family and all the stuff I did there before I realized the power of commercial real estate. I mean, honestly, if I could really go back, I'd have gone back to when I was 18 and got some degree around real estate and tried to stay in that lane my whole career.
Yeah, that's huge. Do you think that the value, not necessarily of commercial real estate, yes, I see what you're saying there, but the compound effect of you being able to start sooner, what does that look like in today's environment if you had those compounding years ahead of time? Commercial real estate, family, like all the answers that you just gave.
The interesting thing is I told somebody this yesterday, we talk about the success being, starting in the seeds of failure. If I would have taken the money I made in 1997 when we sold to a public firm and just invested with the knowledge I have today, 26 years later, we would have been, quite well off if we hadn't given a lot away, which we want to do all the time anyway. Well, we would have been quite well off, but I wouldn't have had 760 investors that I'm speaking to now. I wouldn't have been on your podcast. I wouldn't be writing, a couple hundred blogs for Bigger Pockets and others. I wouldn't be on a stage with Bigger Pockets in a couple weeks. I wouldn't be speaking into culture. I don't know for sure what I'd be doing, but I know I wouldn't be doing this at age 59 and a half. And so I'm actually, in a funny way, really happy that it happened just the way it did. And I'm not just making lemons into lemonade. I really am genuinely happy to be doing what I'm doing right now, and I wouldn't have it any other way. So as far as business, yeah, a lot of failure, a lot of pain along the way, a lot of mistakes in my 30s and 40s, but super glad for where I am now. I'll just answer that one for now.
Yeah. I appreciate that perspective. Inside Gathering the Kings Mastermind, I've kind of dubbed this hashtag grateful but not done. And I don't know how you can be grateful without looking back like you just did and thought, you know what? Yeah, maybe it could have gone different. Maybe things would be different. I don't know exactly what they would be, but I wouldn't be who I am. I can say the same thing about growing up single mom family, not knowing my dad till I was 24. going, wow, that could have changed a lot of things for me.
Right.
Is that what I desire though? I don't know. Cause
Yeah.
I really like who God made me to be right here, right now, talking to you.
Right.
And the journey is only going to continue from here. You got years and years left. I got years and years left. And we have now this amazing opportunity to continue to compound in what the cards we've been dealt. Right.
Right. Very true. Yep.
All right. Well, Paul, you've been incredible. The conversation has only just itched my curiosity just slightly. I've got so many more questions. And so I'm gonna be like your implementer, and I'm gonna reach out to you. You're not gonna be able to get rid of me. So
Awesome.
our relationship has only begun. I appreciate you being here and being willing to not only share with me, but the audience as well. How can the listeners find you? Number one, if they want to just get to know you and follow your content, maybe pick up your podcast from even years ago, or if they are looking for an incredible place to invest, how can they connect with you that way as well?
Yeah. So I'd love to have people follow me on Twitter at Paul Moore Invest. And if they want more information about commercial real estate, want to connect with me, if they want to read special reports on mobile home park investing, RV parks, self-storage, some of the books I've written, you can do that at Wellings Capital. That's WELLINGS, wellingscapital.com/resources. And you can get access to a lot of that free stuff and some of the links to the books.
That's incredible. Well, you've got plenty to pick from as far as if someone's interested in learning, that's for sure. So I hope that they take you up on that. You know, real estate has been a big game changer for me and my family and wealth generation. I can only imagine hooking a wagon to someone like you and your experiences and your ability to find amazing deals. So thank you for being here. Blessings to your family, especially the time that you guys are going to get starting tonight, all the things that you're touching here in 2023 and then years beyond. Thanks for being here, Paul.
All right. You bet, Chaz. It was great. Thank you.
Thank you for listening to Gathering the Kings today. I hope that you were able to pull out a few nuggets to go apply into your business right away. More importantly, though, I hope that you're realizing that it takes more to be successful than just being by yourself, doing it all on your own, carrying the weight all by yourself. What I have realized, not only in my own journey from multiple businesses and multiple different industries, and now interviewing over 200 or 300 other very successful 7, 8, and 9-figure business owners, is that it's tough to do it alone. And so Gathering the Kings exists to bring together successful entrepreneurs. In fact, we are putting together 1,000 kings, specifically who are grateful but not done. We're intentionally assembling kings who fight tooth and nail for their business, family, and communities. And here's what we believe, that in the pursuit of excellence in those areas, that it ignites within us the responsibility to govern power and forge a lasting legacy. So if that relates and resonates with you, and you know that you need people around you, sharp, qualified, other very successful business owners, I want you to go to gatheringthekings.com. I want you to take a look at what we're doing and see if it makes sense for you to be part of our pursuit to 1,000 kings. Talk soon.